Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business.
Hold on. This is the Big Biz Show. I think it is their business.
Making the markets work for you. Here's the man with the plan, Sully.
Hey there, live from the Lofton Hunter Studios in sunny San Diego, California. Big Biz Show's on the air. Great to have you along today. Got the usual suspects here. And I understand that Mary's conversation about paying too much for cheese or cottage cheese. I think I brought the cheese. What did you? I brought the cheese analogy. Price.
Yeah.
Everything's expensive.
But what were you specifically? What
Groceries
sets
in
you
college.
up? What sets you up?
Groceries in college.
Oh God!
Yeah.
Well, grocery bills right now are setting me off. It's ridiculous.
Like, are you looking at the bottom of it, or are you walking up to a can of peas and saying this should be 20
So I was in a store the other day in San Francisco. I went to visit some friends up there. I went and I got a thing of cheese, some grapes, and a third item.
It was like a little charcuterie.
It was a little charcuterie. $39.
Were you in Williams-Sonoma? Where the hell were you
items.
shopping?
Well, that's what I looked at my friend. I'm
See,
like,
Williams-Sonoma.
It was called Lenardi's. It was very fancy.
Hey,
Come on.
Lenardi's.
So listen,
Of course.
$16 for grapes.
So once a month, if you go in one of those places buy the stinky cheese and stuff like that, I can understand.
Okay.
But there's people going on a daily basis, man.
That's what she shops there on a daily basis. My friend and I said, what?
I'll have some tomato basil soup. That's $39.95.
You're
please.
right.
Yeah.
It's crazy town.
I'll have the Iberico ham.
Iberico. Did you say Iberico ham?
Is it Iberico or Iberico?
Is this a movie reference?
Iberico.
Iberico ham.
Let's say hi to the DTT. They're right over there. What's going on, boys?
I like to think.
Can I ask you a question?
Excuse me.
I'm sorry.
Hey!
Thank you very much.
It's them. Brian
Sorry.
Jordan, James East, Trey Sojourner. Hi.
Love you,
Hi.
DTT.
Love you guys.
Okay.
And I was trying to have my wife explain it to me last night. She didn't do a good job, and you just mentioned prices. Can you dumb it down for Lenny here from Mice and Men and explain the CPI,
Tell them about the rest.
Consumer Price Index?
Is this a segment we could call Ask Sully?
Please,
Hey,
yes.
Ask
So, I think
Sully.
so.
Do
Absolutely.
we have a theme song for this?
Yes. I can answer that.
Because I'm not going into Loveland's or whatever it's called to buy.
Lenardi's.
It's super
Lenardi's.
easy. It's super easy.
Okay.
It's an index that measures the monthly change in prices that we pay.
That's it.
That's it.
Consumer
Price Index changes every month. Okay. And a CPI number of, whatever, who cares what the number is, okay? If it goes up, it means you're paying more. If it goes down, you're paying less. It just is, it's an index that measures how much we as U.S. consumers are paying for stuff. That's it.
Does it correlate or does it tie into the consumer confidence, whatever that one?
This is just a monthly change in prices.
That's all it is.
Monthly change in prices.
Okay, so I have to assume
Think
based
about that. It should be called MCP.
Yes.
Monthly change in prices.
Okay, see, I would have been able to grasp
Well,
it.
that's
related
because
to
you-
Listen,
inflation.
this should be called, but this should be called a black eye, not a circumorbital hematoma. Right?
Okay.
Right?
You're right.
Right?
You're right.
Yeah.
You're right.
For the Lennies of the
I got a circumorbital hematoma.
Yeah.
You got a freaking,
Exactly.
Keek, right? It's CPI, Consumer Price Index. Monthly change in prices.
That's why I have to
Where do
assume.
you look this up? Where do you find it?
Easy. You can
Google it.
Go to marketwatch.com. Go to Investopedia.
Okay.
Investopedia.com would be
Okay.
great. If you want a quick response on what stuff means in terms of monetary stuff, and they're not a sponsor. Investopedia would be the way to go.
Okay.
Okay, I have a question then. You check it at the beginning of the month for what's going to be in May, or you check at the end of May to say what May was like?
They give you what.
And then does
CPI
it
goes
tell
up
you-
this last month.
Okay, then can it give you some insight as to what's coming your way?
Not really.
You know, all right.
Inflation can. But I think that's the biggest piece of this thing. I mean, that's why I pay attention to the Fed Reserve and what they're saying, what they're signaling, because I believe in this Fed chairman. Number one, number two. But you have to understand, we're in a specific time here, and that specific time is that we just 4 years ago got out of the horrible economic crisis because of COVID, and this is a slow-moving ship. We turned off this economy with like a light switch.
Yeah.
It's going to come back like a sunrise. You have to understand that. I mean, like that's the only analogy I can give you.
Okay.
It went, huh, beep, and we were at home.
Yeah.
And since then, which I'm going to argue is beginning of 2021, come back up. Big Biz Show, coming up. Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer@salientgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Welcome to the Big Biz Show, featuring insight, analysis, and a lot of stuff that's none of your business.
Hold on. This is the Big Biz Show. I think it is their business.
Making the markets work for you. Here's the man with the plan, Sully.
Big Biz Show, rolled on a beautiful day for the Loft 100 Studios.
Everybody.
Traffic on the 5.
I'm gonna bust you every time. Hey, Big Biz Show.
Start to pew a little bit. 5:05, 5 after 5, 55 before 6 on a beautiful Thursday in America's finest city.
Pretty good at that.
Bob from sales is going to stop in, bottom of the hour. Tell us about the big fundraiser coming up this week.
God, did you ever do morning?
You've been doing this a long time.
You been boss jocking? We haven't. I've never was boss jocking.
Oh, yeah. Oh, my God. Just every minute's got to be filled with, blah, 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 blah. It's just got to be filled with something.
Sweepers, rejoiners.
Oh, my God. Zing!
We were talking about consumer price index in a segment we like to call
Oh, that is
apparently
great. Ask the dad from Wonder Years.
Was that the first? I was thinking it looked like every Russian mobster in every John Wick movie.
They need to put you in an Adidas tracksuit.
Exactly. in a yellow Lambo. So just we're talking consumer. If you're just joining us, we're talking about consumer price index and what's the easiest way to define it, and it's just monthly change in prices. It should be called the MCP.
Okay.
That's all it is.
So
it tracks the changes that we paid for stuff from the previous month every month.
And it's related to inflation.
So what categories do they use? Groceries, gas?
Everything. Nothing stripped out.
Really?
Well, food.
So then it's a percentage. It's not a number.
Now wait a second. Is this the CPI or is it the consumer? Oh, here's the deal. Consumer price index, however, this is interesting. Strips out. Let me see here. Let me make sure I'm saying the right one. I believe it strips out food and gas, which is interesting because the producer price index says. Let me just see something. Hey, Jared, we have to.
Food like
only the two things we're most concerned about.
Right.
Food and gas.
Food and gas.
Right. It's got tennis balls in there.
Yeah.
It's got horseshoes. It's got horse manure. Yeah. But it doesn't have.
It removes food and gas because the cost of living index includes food and gas, which is the same.
Oh.
So basically, it's not a perfect inflationary measure, and the reason they take out food and gas in the consumer price index is because it's so volatile, right? I mean, food and gas are like
right.
But it's probably the cost of living index includes food and gas is because like when you say put a budget together, most people do this: rent, mortgage, gas and electric,
insurance,
streaming services,
cable, streaming.
Yeah.
I've
True.
got 5 of those.
That's it.
Lenardi's.
That's their consumer price
Yeah,
index.
that's his whole line item.
Then that's their consumer price index. Okay.
Okay.
But their cost of living index would include nail appointments,
He looks at me.
nose hair removal appointments for Mike.
Good on me. That's gotten really expensive. Hem care.
No, honestly, pet food. I mean, all the stuff. Like when you first sit down with your girls, and you've already done this, pardon me, like I have. When you first sit down with your girls and say, and you with the Bam Bam and Emma, the rock star,
Yep.
you're going to say, put together a budget, and they're going to put together a budget, and they're going to sit down and go, okay, wait a minute, what about? Because everybody forgets about it.
Because they don't know.
And when I first got into investment banking, people would come to me, and when I first got into radio, I'd say, I can find at least $300 a month from almost every household, at least $100 a month from every person per month that you're wasting. And I could, because people forget.
Yeah.
Especially now with subscription services.
Oh, how many?
I mean, it's crazy how many.
When I go on my passwords and there's 7 Netflix. I mean, honestly, that's how it goes. So
We just did the, and I forget who it is, but you can sign up and they go through everything that your credit card is attached to, and then they send you a report like, oh, you were subscribing to this. Did you know that? You're doing this and that. It is liberating. It's like throwing old clothes away or de-junking your house, decluttering.
Yeah.
Doing that with a credit card attached to, like you said, why do all of us have a Hulu subscription? Why aren't, that type of thing?
Yeah.
I need my Hulu though.
You save.
I need my Hulu too.
I mean,
right.
let's not cut that out.
When I look, but here's the thing is, and this is what happens is we become, we want instant gratification, so we're on the TV, and I want to watch this movie right now.
Yes.
Like I wanted to watch Game Day the other day because it's draft night. I love that movie. Kevin Costner. I haven't watched it in freaking 3 years. I want to go in there and take a look at the freaking thing, and I'm like, I get into it, and I forgot and so I had to go to open up a thing with Paramount or Peacock. Yeah. So I got a Peacock thing.
There are people that work the system.
I wish I knew how to do it.
I don't know. I can't do
it. I don't have time to do it. So
yeah, true.
So there we go.
Password.
And instant gratification. I want to watch it now.
So long story short, that's what's happening. And yes, it's all a measure of inflation.
Okay, and the Federal Reserve, they just had this big meeting. Inflation.
Yeah, the Federal Reserve has meetings.
Going on?
Has meetings often, and of course Jerome Powell is the chairman of the Federal Reserve. You can go back to Alan Greenspan, going to Ben Bernanke, going to Janet Yellen in our recent history. Inflation. Let's talk about interest rates. Interest rates are the highest they've been in 23 years.
Wow.
23 years. And in fact, Chloe was not born last time our interest rates were where we kept them.
Lucky.
Highest in 23 years. So the Fed will do something. The Fed is charged with really 3 things: maximum employment, steady prices, and low interest rates. That's what they're actually right on the website. Let's say the first 3 things. This is what we do. Okay. The thing about the Fed was initiated. I can't remember the exact year, but I think it was in the 20s or the 30s. But it was very wealthy families in this country, Carnegies, Vanderbilts, Rockefellers, went to Jekyll Island, got together and created, we own most of the money. We need to figure out how to control. So they got together with some Washington congressmen, and they created what was called the Federal Reserve. The Federal Reserve is not a federal agency. It is overseen by Congress. But nobody really knows who owns the Fed, and nobody knows how much they own. It is highly suspected that the banks that use the Fed are the owners of the Fed. Okay, so let me get this for you. Remember when interest rates right now are between 5.25 and 5.5 discount window rate. Okay, it was at 0 or less than 0 at one point 5 years ago. Wow. Does anybody have a 5%? Anybody buying a home today? Can you get a 5% interest rate?
Nope.
No. Anybody who has a car loan, 5%?
Nope.
How about a credit card rate?
Nope.
Pretty good scam, isn't it?
Yeah.
I would suggest everybody read The Creature from Jekyll Island about the Fed, since you brought it up. You're going to see interest rates higher longer, Q4 before they start cutting rates. One of the strategies for the Fed is that they keep interest rate high to stave off inflation. They want you to stop spending money on your credit card.
Yes.
Okay. Keep in mind that discount window rate, okay, the discount window rate is a rate that the banks are charged by the Fed to borrow money, okay? So the Feds are the borrowers, they're paying 5%, and they're charging you guys for your stuff, all right? Now, This doesn't affect mortgages, and the reason I brought up mortgages anyway was because the 30-year long bond affects mortgages, but it affects savings rates for elderly, so it hurts. It helps savers, but it hurts credit cards, hurts auto loans, hurts those types of things, and increases up prices. The biggest concern is stagflation. You know what stagflation is?
No, I do not. I
want you to add unemployment. Let's talk about the worst storm you could have, in business. How about slow growth? Okay, so we're not seeing growth. High unemployment and inflation equals stagflation. The Fed insists we are not in a period of stagflation, which is the most dangerous condition we could be in, which we're probably not because things are starting to come around.
Right.
But they're going to keep this thing at 5.25, 5.5 till the end of the year. And they're going to try to make it painful so we stop spending money.
Well, they also, didn't they, or they've also redefined what a recession is?
No. No. This
Okay,
administration.
Excuse me, that's what I meant to say.
More Big Biz coming up.
In over 170 countries and all the ships at sea on the American Forces Network and a lot of other places to catch us. Big Biz Show rolling on.
Costa just phoned it in today. Hey, we're here. We're on TV. Good to see you.
We're in America, Mexico, Bloomberg Financiero, and of course now Bloomberg EU.
Soon to be.
Everybody, soon to be, sorry.
There you go.
So everybody, thank you. Back to our men and women of the United States Armed Forces. Can never thank you enough for what you do for us. Costa, Miraber, Godwin, Greg Todoroff, Sully.
Okay. Before we get to our guest, David Garofalo, which is great because David Garofalo is the CEO of Gold Royalty Corporation.
Yes.
Gold folds into all this stuff. And I want to talk about that. But long story short, when we're talking about the Fed, we're talking about interest rates, we're talking about who it affects, okay? We're going to be in this period of being charged higher interest rates to stave off us spending money. Now, keep in mind, 70% of any GDP, gross domestic product, that is the report card of our economy, is based on consumer spending. So you want to have good, solid GDP, right? However, too much spending, too fast, causes a demand problem. And if you already have a supply problem from COVID, let's say, what do you think that's going to do? Now, that's going to cause inflation. Let me tell you what causes hyperinflation. When you start pumping money into the system, okay? When you start printing money. So we had a stimulus. We printed money, right? Gave it to the people. Had to.
Yeah.
It was a brilliant move.
Yeah.
And we did it again. Yeah, okay. The third one that we did put us in this position. So where it was, inflation was happening. Okay, now we're at 2%, now we're 3%. Okay? I mean, the optimal for the Fed is 2%. We were at 0.
Yeah.
Now we're at 2, we're at 3, and we're at 4.5. We went to 8. Remember that? June of 2 years ago? Right? Honest to God.
Yeah, it's enough to make you cry.
If you look at a graph, and I probably have one somewhere, showing money flow, meaning pumping money in the system for whatever reason, or we're going to war, war bonds, whatever. Going back to 1940, in fact, I'll go left to right. I'll go to your left to right. It goes money flow here, okay, followed by inflation. Every time. Money flow, inflation. Yep. Money flow, like if you put a red line of money flow and blue line inflation, you'll see it every single time. I mean, it literally is a leading indicator. Like you can tell, you could predict if it were a stock, you could make $1 billion. Because every single, you see this signal, I'm about $1 million on this, bam!
It's coming.
It's coming, every single time. So that's why. Now, gold plays into this because gold has normally been, for many, many years, a hedge against inflation. And there's arguments for and against that. Gold lost some of its favor a while back. But now gold is really on the precipice because of what's happening here. And we bring you my good friend David Garofalo. He is the chairman and CEO of a company called Gold Royalty Company. Their stock symbol, look at their stock symbol, GROY. David, thanks for coming back because you come at a perfect time here. And I want to talk about this inflation thing that we've been discussing because part of this inflationary issue is really attached at the hip to you guys in the gold business, correct?
Absolutely. And inflation has been rearing its head for 50 years. It's really a function of debasement of paper currency. You hit the nail on the head. The temptation to continue to print money, to increase money supply is just too great for central banks. The only limit they have is what the printing press can spit out. whereas gold is the one currency you can't print. It's very finite in quantity. And if you look at gold over a 50-year period from when the U.S. government abandoned the gold standard, gold's gone up from $35 to $2,400 an ounce, whereas the purchasing power of the U.S. dollar has declined 96% over the same period of time.
The one of those big things that Mary brought up was this issue of debt and consumer debt and spending money. Prices are so crazy, and of course, the Fed is trying to stave off our continued consumption, at least at this rate. That's where that favors gold in a big way. And can you explain why?
Yeah, we're in a debt-fueled world right now. Global debt to GDP is 350% versus 100% back in the 70s when we were last through a major inflation cycle.
Okay, hold on. Stay right there. That means, do you know what debt service means, guys? Debt service is what you're paying for your interest rates.
Yep.
Our debt service is what, David? $1 trillion?
In the U.S., it's $1 trillion a year.
A year in debt service. Just what we're paying, that's the VIG. That's the vigorous.
Wow. That's
what you're paying the Shylock. The vigorous, you're paying $1 trillion a year in debt service. David, continue. Sorry to interrupt.
Yeah, no, and that's doubled in the last 18 months. As the Federal Reserve started to ratchet up nominal interest rates, we saw debt service balloon, and it's going to balloon well into the future because as Treasury yields start to reset, because a lot of Treasury bills were locked in at much lower rates when rates were much lower, and as they reset, we're going to see another doubling in debt service over the next 18 months. That means 2 out of every $7 of tax revenue generated by the U.S. government is going to go to debt service. That eclipses all the social program spending they do in the United States.
What's interesting about that is you guys as a gold royalty company, and we'll talk about that coming up here because I wanted to finish on the economic talk. You guys, this is very bullish for a company like yours. I mean, inflation is understated right now. Real estate, in my opinion, rates deeply in the negative territory with respect to what you're getting out of this stuff. So you can't really turn anywhere except for equities markets, and of course you've got to have a diversified portfolio. I personally hold gold in the form of stocks. I don't hold physical gold, although a lot of people love to hold physical gold. The problem with that I have with physical gold is if physical gold, pardon me, is X per ounce. If you want to buy physical gold, it's probably a 10% or 15% premium on that to hold the physical. It's just so little gold. People, you pay extra for it. I'd rather buy an exchange-traded fund, a stock like GROY, Ely Gold Royalties, which we had a long time ago.
Yep.
Long story short, talk to us why this is important for our portfolios, and also let's talk about GROY because let's face it, you're based upon your Q1 results. I would argue that 15, 17, 10, whatever it was, 110% increase speaks volumes to what we're talking about right now.
Yeah, what you're talking about is leverage to the gold price. As the gold price goes up, that gets reflected disproportionately into our bottom line. And that's true for many operators that have stable costs. Their profitability expands exponentially relative to where the gold price goes up. Their margins expand. And that's a leverage proposition that gold equities can provide. In addition, because our operating partners are conducting exploration on their underlying properties, they're growing the ounces in the ground, we get exposure to that exploration upside. The great thing about the royalty model, of course, is we don't pay anything for that upside. Once we own a royalty, we own it in perpetuity. We have no capital calls. We have no cost inflation. We have a very low cost structure. So we have optimum leverage to both the gold price and to exploration conducted by our operating partners.
David, I'm hogging my co-host's questions for you here, but it's all part and parcel of what we started talking about. You guys went public, 3 years ago?
That's right.
Your IPO. Yeah. So this would be the first time that you're cash flow positive in 3 years, and this is such a this inflection point for you.
It is. We're in the free cash flow and positive earnings territory for the first time in our history. And that's remarkable for any startup company in any industry. But we started with a concept, basically something on the back of a napkin 3 years ago. We took it public, and we've expanded from 18 royalties in our IPO to over 240 royalties today, with 6 of them producing, 14 in construction, which underlies a 60% compounded annual growth in our revenue right through the end of the decade.
David Garofalo for president.
Wow.
Come on.
I'm voting for him.
I'm serious. I'd vote for him too. David, thank you, pal. Chairman and CEO, Gold Royalty Corporation, stock symbol GROY, leading growth and America through gold. I don't know if you don't have gold. I'm a big believer in GLD, which is Exchange Traded Fund. I'll explain that when we come back from the break. Big Biz Show, bigbizshow.com. Loft 100 Studios, the Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks. If we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at salientgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
Nationwide in these here United States of America. In Mexico, Bloomberg Financiero, soon to be in Europe. On Bloomberg EU, Big Biz Show.
No, we are in Europe. Sorry.
Are we in Europe?
Yeah, because Armed Forces Radio Network.
Oh, my mistake.
I'm sorry, AFN, Armed Forces Network. It used to be
And all
called
the ships
APARS.
at sea? Over 170 countries?
175 countries.
175 countries.
That's on their logo. That's on their website now.
Dang.
It used to be called American Forces Radio Television Services. Showed up our very first TV studio that we built.
Yeah.
Many years ago. I'm talking 16 years ago.
Is that Jump?
No, it's called AFN.
Jump Television Studios?
The old Jump Television Studios. We are brought to you by Prudential. Let Prudential be your rock for retirement. Also brought to you by Bayer Advanced. Better science, better results. Starbucks coffee. Little company you may know. I'm hopped up on some right now.
Macchiato.
Blue Brands are fine family of restaurants, including Outback Steakhouse in their authentic Australian bloomin' onions grown on the side of the road. Northwest Biotherapeutics. Oh, look at Country Smooth is still up there.
Look at that.
That'll be the last time you see that one. Totally kidding.
We need a Starbucks run, speaking of Starbucks. I'm ready for a Starbucks run.
You can't. Oh, yeah.
Right now?
Love Starbucks.
Yeah, right now.
Really?
Yeah. I was not on the camera for that. What's your favorite drink at Starbucks? Are you a secret menu person?
No, I'm just a drip coffee.
I'm just a drip.
Half and half.
Coffee. Are you a coffee person?
I love coffee.
Do you really?
Yeah. 1 cup a morning.
That's it?
Love it. That's it.
One?
You're one of those that
Would you have two though?
No.
Greg is very. Look at Greg.
No,
Greg's very
see, but
regimented.
if you go too much, then it can have an adverse effect. So you find
Like
your
Celsius?
level, right? You find
You
your
drink a
level,
Celsius? Hi,
and
I
then you
drink
get to that level, and then you yeah.
I made the mistake. Have you know Celsius drinks?
Oh, yeah.
Delicious.
live on those.
Delicious.
Yeah.
Sure.
Thought they were just drinks.
Oh, yeah.
Had no
oh, yeah.
idea.
No.
They're
They're so
equivalent like 3 cups.
potent.
I had like 3 one day. They're like, hey, what's that?
The teenagers are living on them these days.
I had no idea.
And Red Bulls.
It is a pre-workout drink.
Oh, yeah.
I would just like, grab a here, let's go.
Hydrate before I go to bed, a little Celsius.
I did. No, I had.
Yeah,
I had one in the middle of the night. It was,
Yeah. Oh, yeah. No.
I had no. James said, "Hey, have you seen the label?" I go, "No, it's apple soda, isn't it?"
Yeah,
Sounds
yeah.
Doesn't happen. Blake Janover, one of my favorite people, of course, is the founder and CEO of a company called Janover Inc. They're publicly traded. The stock symbol JNVR. How many good things is coming around? Janover Corporation. He got this because getting a symbol, it ain't a guarantee.
Yeah. And he nailed it.
Yeah.
JNVR.
Exactly right. And he joins us once again via Zoom. Meet Janover. Well, you can meet the guy here. Blake, how are you, sir? Good to see you. Look at you. Look at you, straight from Coachella.
Always a crowd.
Unbelievable.
Look at that. Yeah.
Thank you for having me. Always a pleasure to be here, lady and gentlemen.
Yeah.
Thank you.
There's one of each. lady, gentlemen, or lady, gentlemen. That's how it goes. Hey, I want to talk real quickly. You guys have enabled this AI platform that powers faster, smarter commercial transactions in the real estate business. Talk about that for a second so people can really understand what that's all about.
Sure. So we have a platform that starts with financing commercial real estate. So up until now, it's been incredibly difficult for commercial real estate doesn't mean office, right? Office is a small part of commercial real estate. So apartment buildings, industrial plazas, medical office, whatever. Owners, operators, and developers have traditionally had to go to their bank or to a broker that has a few banks. And they never had broad access to the market. So we built a digital platform to create broad access to the market. We have more than 10% of the banks in America use our platform to bid on debt. I think we have 35% of the top 100 credit unions, another 1,000 or so other lenders, debt funds, REITs, life cos that lend on commercial real estate. But it's not just the debt that we can reduce frictions in and make better. We've recently introduced commercial insurance, and Groundbreaker, which is a B2B SaaS, software as a service for investor management. So our aim is to provide a full suite of modern financial services, tech-enabled, AI-first financial services for multifamily, retail, industrial, self-storage, owner-operators and developers, and hopefully in the future to many small and medium business owners as well.
Hey, Blake, I have to ask you in terms of regulation. Obviously, highly regulated in the real estate business, also highly regulated in insurance business. How do you manage all of that and still do what you do? Because I mean, if you look at the way the company's going, I mean, you guys are slaying dragons every day, and things are going fantastic for you guys. But you still have, much like in the securities industry, I mean, you need a whole department to deal with the regulatory issues. Is it prohibitive for you guys, or is it just part and parcel of what you guys do every day?
It's both. So it's part and parcel, and you know, the extent to which it's prohibitive does serve as a bit of a moat. It is a pain in the ass to get it, or the butt. Sorry about that.
No, it's pain in the ass. I'm going to go with you on that.
Yeah. To get as far as we've gone.
Yeah.
We've got great people working both in-house and externally. Great advisors, great partners and teams that run all the compliance stuff, so we can just focus on providing fantastic service and deep value.
Yeah, what's interesting there is the fact that this is just another form of revenue for you guys in an existing infrastructure that could take on many more, including, I think Groundbreaker was the other one you talked about. Talk about what is Groundbreaker, and that's a subscription model, correct?
Yeah, so look, insurance is recurring, so that's higher quality revenue than traditional transaction revenue. It's a high gross margin recurring revenue business. And Groundbreaker is recurring also. It's a subscription business. So most of the big, I don't know about most, but most of the big commercial, I said it again anyway, so it must be true.
I'm going to go with most.
Yep. Many of the big apartment buildings, commercial real estate properties that you see, the large ones, it's not one guy cutting a check. It's generally a fund or a developer or an entrepreneur that's raised money from a bunch of investors, and they've invested in the deal, and this operator owns a big piece of it, but he has a bunch of investors in the background. So Groundbreaker is an investor management portal. So it allows anybody, Sully, you want to go raise $100 million from $1 million checks from 100 people. You have a portal, you can, Sully.com, they could log in, look at the docs, analyze the deal, sign docs digitally and securely, send money through ACH, wire, what have you, get distributions as the property performs, get their K1s, all through a super secure portal. So it takes anybody and gives them this feel and experience of institutional security and service.
Blake, as a whole, the commercial real estate market its way? Are we kind of flatline? Are we going down? Where are we?
Well, that's a good question. That doesn't have a straight answer. So interest rates are financial gravity. That's like a Buffettism. So all financial instruments ought to move inversely with interest rates. As interest rates go up, the value of those income-producing assets go down. I think it's a very unique market. So urban office has been under a great deal of pressure, as it should be. There's a whole part of the market, CLOs, collateralized loan obligations, which happen to be a lot of floating rate commercial real estate bridge loans. Those had a lot of pressure. I think defaults exceeded like 10% there. The broader market, I would say, is not under the kind of duress and pressure that is painted on TV. Multifamily is performing well in a lot of places, but you find pockets, right? So if you own apartment buildings that are coastal, they've been whacked by high insurance costs. If you've got a short-term bridge loan that's floating rate without a cap, you're under some pressure. So the market broadly is going to be okay. I'm getting played off. This is like the Grammy.
No.
Take your Oscar and get off stage.
This is why he's coming in with us every single week. This is literally my favorite guest. I'm not kidding. He knows it too.
Yeah.
So here are conversations off the air. There's interesting enough. Blake, thank you, brother. I appreciate it. We'll see you next week, and we will see you next week.
How many people know that played off is the right way?
He would.
Yeah.
You should get to know him. Really comes to the studio.
Oh my
Fantastic
God.
guy. Big Biz Show. See you in a minute.
Big Biz Show. Hope you guys are having a great day. We always appreciate the fact that you're hanging out with us, especially right here at the bar. Costa, Marybird Godwin, our executive producer, Greg Todoroff, and the man with the plan, Sully.
And I cast you. We're having a great time here in Las Vegas. Big Bang Boom, Big Biz Show, man. Cats and kids. We're having a great time.
It's such
I
a
left
bummer.
my heart at the Big Biz Show.
It's such a bummer he's gone.
I know, isn't
God,
it?
he was.
Sully Tony Bennett Sullivan.
Oh my God, he was so good.
You knew who that was, right, Mary? You knew that was Tony Bennett that he was doing.
Oh, you didn't?
You didn't know that was Tony
Hey, we're having a great time.
Seriously, guys.
Mr. Positive. Never once had like
Oh, he's
Roman's
phenomenal.
Hey, we're having a great time.
Like, no kidding.
Yeah.
And
or who's next, Greg?
I think we got Alon Goren.
Oh, our
crypto guy.
Crypto guy.
Crypto
We
guy.
love Alon.
Love Alon.
Alon, what's up, brother? Great
lot
to
of
see
questions
you.
for this
Alon, look at him there. Look at
Hey.
Oh, look at him right here.
He comes on
Mr. Menlo
smiling.
Park.
I'm just trying to perpetuate all the super ruggedly handsome crypto dude stereotypes.
It's funny. Mary was just saying that, Mr. Draper, Goren, and Holmes. Is it Draper, Goren now? Did I get that right, or is it Draper, Goren?
Yeah, Draper Goren blockchain, DGB.
Look at you.
rebrand.
Wait, back up. Let's see that. Do you have it on your shirt there? Do you really?
Have it on my shirt.
Boom. Yeah, let's see.
Living in the DGB.
Right. You down with DGB?
I met Alon. I don't know how long ago it was when I met you. I met you. It has to be 10 years now.
Yeah, I think the first time I mentioned crypto, I heard sirens in the background, and you guys were like, "What the heck is going on here?"
That's exactly right. And you were a crowdfunding expert back in the day. You actually had a crowdfunding summit a number of times, and then you moved over into crypto investing, Bitcoin, Ethereum, venture capital, 805 startups, 100. So first of all, their website dgb.vc. dgb.vc. I'll put that up on the website for us too.
This is a newish thing, right?
Yeah, well, this is a rebrand of this is just, for me, it's this evolution of Alon Goren.
Yeah.
But Alon, let me ask you something. So I've been approached with a trading platform for crypto, which is really robust to invest in. And in fact, I want to show it to you, by the way, just because you're a friend, but I want you to see it. But I think also there's something about crypto and digital currency that is still bugging the back of my mind, and that is A, it's a 24-hour market. B, it's not as regulated as I am used to. I'm not saying it's not regulated, it's just not as regulated as I'm used to. What gives you the sense of calmness to go to sleep at night when you've got the same concerns or had the same concerns at one point?
Yeah.
Talk about that piece of it for me.
I think it's really a major bummer as an American to see something that's like so innovative, creating tons of jobs and creating tons of wealth and opportunities that, we aren't regulating it properly, or we're just kind of standing back and watching it instead of participating actively. Because like I think I've said this in the past, is for my first time ever, I'm seeing Americans that like to talk a big game. Like, if this happens, I'm going to Canada, I'm going there. But they're like, young people are actually moving. I'm meeting entrepreneurs who are in Singapore and other places who are American. So from the regulatory standpoint, it's not great here. They're not giving us enough clarity to make it exciting. But from my standpoint, being early stage venture, it feels a lot like the early days of social media or the early days of the internet.
What a great analogy.
Alon, is the fact that the regulation isn't where you would like to be, is it because there are just so many people that really don't have a true grasp and meaning of what this could be for us?
I think that, I want to be fair to the politicians.
Blast them, come on.
But the thing is, I think that, it's one of those things that people say, like, stupid or liar, right? I think that career politicians who are on the Financial Services Committee, they're on the Financial Services Committee for a reason. They're really smart and they know what they're doing. And for the longest time, it was against their best interest to open this market up. And now I think they're realizing that that's backfiring, right? And the most successful ETFs in the history of ETFs have been these Bitcoin ones. And so I think that they're going to, change their minds or find a right path soon. And I think that's going to be really great for us. But like I mentioned before, early days of the internet, I have a slide in our presentation that I'll send over to you that basically it's a big slide that says no one starts an internet company anymore.
Yeah.
The next slide is every company is an internet company now.
That's really true.
So, we're streaming this online, not just on TVs, and the TVs are getting it over the internet. But when you go and talk about your show, you don't say, I started an internet show.
Right.
You just have a great show. Just like a person starting a restaurant right now doesn't go, something special about my restaurant is you're going to be able to order online. If you didn't have that ability, you wouldn't be able to even start a restaurant.
That's exactly right.
Right? So this is where the blockchain is going. Not necessarily crypto tokens, like dog coins and meme coins, but where the back-end database of all transactions are going to happen more transparently because there's less and less trust.
Hey, Alon, so just for a little infotainment and education here for our audience, venture capital is usually when a company has demonstrated that they have something that's bigger, better, faster, stronger, cheaper, some proprietary advantage. They've got a good management team. They've got somebody on there that's taken someone has done an exit, and it's usually a 7-year play as an investor.
Yeah.
Private equity, during that time, will come in and say, you know what, we're going to take out all of the convertible notes, and I'll explain that later. We're going to take out all the other, and we're going to give you a partial exit. We still want you to run this thing, so on and so forth. How does that fit into your world? Because you are really in the venture capital world and also a private equity world, but you're also in the crypto world as well. How do you merge those three together?
So to me, it's all about the vision, right? And what we want to do and where we want to go. And I treat this industry and I approach it from the VC perspective in the earliest stage, right? The earliest stage VCs are exactly what you're talking about. 7 years is actually kind of short, right? It's 7 to 10 years to get an exit from inception of the company if they're successful. So I look at it from that perspective. And if a company wants to create their value in tokens, create their value in equity, or however they want to do it, I'm cool with it as long as it's legal and I'm not investing in it for that short-term return. I'm going for the next 10 years. But we do have to pay attention to what you're talking about because the IPO markets, all those things are gone, right? So you have
Alon, you gotta get down to San Diego again, man. Come on.
I know. I gotta come into the studio.
Get over here. Thank you, buddy. Alon Goren, of course. Draper, Goren, blockchain, dgb.vc is their website. That does it for us.
DGB.
DGB.
DGB. What's up on the
Hey, let's hit a wrap, Drake. Hey,
Go.
Man.